Come back to Commodity Champions. Well, the crude oil prices are headed for the best quarter since 2009. It also is headed for best first quarter since 2002. The crude prices not only have outperformed in the commodity as an asset class, but overall asset classes as well, where nothing else in this quarter has given you high returns as high as crude, with Brent prices up 24% and the US crude is now up by 30% in this year. And that's not all. If you look at the other commodities, we have seen similar gains come in. Nickel is up 22%, palladium is up 18%, and other metals and precious metals also have done quite well. Joining us then to talk about more on that is Abhishek Bansal, who's chairman at Abans Group of Companies. Abhishek, hi, good to have you. Starting with the crude oil prices first, and what a performance where even as we are looking at the global recession concerns, slowdown concerns, US is producing crude at record highs, exporting crude at record highs as well. The Brent crude prices are ending as the best performer across asset classes. What is your sense on the quarter forward now?
Yeah, crude oil has gained quite amount in the last month or so. Basically, one of the reasons may be that we are seeing some positive headwinds on the US-China conflict that was trade war that was going on. So we are seeing some positive headwinds on the US-China trade war. Also, OPEC has been playing quite a positive role in supporting the prices near about $70 per barrel. So we don't see a downward headwinds on the crude oil prices in the near future. The crude oil prices should be firmly on the positive side and should be remaining firm at these levels.
Okay, so while we have seen the crude price range at $15 per barrel for the first quarter, do you see that stretching? Do you see the Brent prices moving up and beyond $70 per barrel for the second quarter?
Yeah, I think so. The crude oil prices will be range bound with a positive bias, with a bias towards the upward direction. But don't see that the crude oil prices will be, going out of the reach, because there are growing concerns of economic slowdown in the US, so which will impact the demand from the US of the crude oil. But at the same time, we see OPEC taking steps to make sure that the crude oil prices remain firm between $60 to $70 per barrel, and also positive headwinds between the US-China trade dialogues.
Sure. Also, Abhishek, as we get into the next quarter, the month of April itself is going to throw a lot of things. The US and China trade talks for one, a lot of macro data that is still expected, especially for metals then. Do you see demand supply numbers actually ruling it higher, or is it going to be all about the macro sentiment and macro data that will continue to impact the prices?
Yeah, on the base metal front, it's quite a mix of fundamental micro views, macroeconomic data, as well as the supply-demand data, as well as the trade conflict going on between US and China. But one thing which will result in increased demand of base metals from China is the reduction of the VAT on base metals in China. The VAT has been decreased from 16% on the base metals to 13%, and that will be applicable from 1st of April. This should give rise to increased demand from China for all the base metals. Also, coupled with it, copper and zinc, they are running very low inventories in LME. For example, on zinc, we are at the 12-year lowest inventory on the LME. Coupled with an increased demand in China because of reduced VAT. Nickel, again, there is the EV, electric vehicle story behind it. Copper again remains in a deficit environment because there is no new supplies coming out in the next year or so, and we would be seeing increased demand coming out of China because of reduced VAT. So, but at the same time, we are again having concerns of US economic slowdown, which we could see from the Fed statement. It was much more dovish. That's why the gold prices rallied. And so that could be one of the concerns where the prices should go down because of the US slowdown. But otherwise, as for the fundamental view looks to be, the base metal looks very strong, especially zinc and copper.
Sure. One word on the gold and silver prices before we let you go. While the gold prices are closing this quarter up by nearly 3%, we have seen the silver prices decline 2% in the same time. What is your sense going forward? Is it going to be about other commodities, equities, or do you see some money flowing in the precious metals, especially gold?
I think so. Fundamentally, gold is still very much undervalued, and within a span of maybe a year or so, we could probably see a price level of nearly $1,400 per ton on gold. Considering the amount of paper that has been printed in the world economy since the global economic crisis from 2008, I still believe gold has not appreciated enough to replicate that printing of money. So at $1,300, still gold looks undervalued, and we could see the prices going up to $1,400 in the next year or so.
All right. So not such a big fan of gold, but precious metals, rather metals and crude prices will continue to do well as we get into the new quarter. Abhishek, thank you so much for joining us. And that's all the time that we have in Commodity Champions. Thank you for watching.